All right, guys. So in the last video, right, we discussed using higher time frame analysis in short-term trading, right? We covered the basics of kind of what a weekly range is and what it looks like and kind of the theology behind it. And then this week, or in this video, right, I want to go ahead and get into um, how to use the weekly ranges, right, in short-term trading more specifically, and we're going to look at actual charts. Now, if you can see here, we've got our weekly profile ranges, right? I'm only going to do the bullish examples. It's the same exact thing, just flipped opposite for the bearish. So just take good notes about the bullish ones, and then feel free to do the bearish ones on your own. So, for instance, instead of it being classic Tuesday low of the week, it would be classic Tuesday high of the week, and you would just draw it opposite of how it looks, and that's for every single one. And then of course anything that's trades down into a bearish, right? It would trade up into a bullish like order block or something, and then trade down, and a discount would be a target. But anyways, let's go ahead and get into these ones here. So these are the main five that you'll see in the market, right? This is just the bullish examples. There's bearish ones exactly like it, but these are the five typical patterns that you tend to see in the market. And when I go through these slides, you'll see that we have I have an example for each one. Now, remember how I told you how the weekly candle unfolds, right? We're going to be looking at where we can get our short-term trades in these types of markets. So each one is going to be kind of a different environment and a different type of entry usually. So for the classic Tuesday low of the week, right, we have price opens here, right, and then it'll trade into a higher time frame discount array on Tuesday low of the week, and this will be our one shot one kill. This is like our classic one shot one kill trade right here. When we catch the low of the week or very close to it, and we try to ride all the way up and it catch a majority of this range. And typically, we understand that price sets the high of the week on Thursday on bullish weeks, whereas on bearish weeks, it sets the low of the week on Thursdays. So um, and remember, whenever we're looking at the weekly range, right, and looking for our expansion move, we're trying to catch a move from a discount array up to a premium and a premium array. So this premium array will be our target. Now, what we're going to be trying to do, right, is catch, say, from off of a weekly order block up to a, daily fair value gap or a daily order block or whatever, right? Sometimes what I tend to do in my price action, whenever I'm looking at it, I'll mark up all of my monthly, weekly, and dailies, right? And I'll go in and I'll have everything lined up, but then I'll see a target on the 4 hour, right, that typically looks cleaner or better to me, right? And it'll line up with one of the other higher time frame PD arrays. So that 4 hour target on a daily chart, right, would end up being my target. So you can use the 4 hour when looking for targets. Seek and destroy on a bullish Friday, right? So this generally happens in weeks that we're expecting volatile news such as NFP, even FOMC sometimes, right, can cause this, or we're just on like the heels of a very big volatile news, right? So what this market profile looks like is very consolidated and ugly throughout most of the week. And then on Thursday, it tends to run the intra-week low. So what you'll have is you'll have price trade here down. It'll set a high, set a low. It'll run the intra-week high, then it'll run the intra-week low, right? And then that's going to be our low of the week most likely. And our buy scenario is going to occur somewhere in here, maybe even on Friday, and we'll see the big expansion move up. Now, it's not going to always look this pretty. Remember, these are all just very crude depictions and basic examples, right, of what the market does. Sometimes you'll trade down on a Monday and then sit here into Tuesday and then go up, right? So it's not going to look perfectly every single day. London session or New York session. It's not going to be that perfect. Almost never that perfect. Now, you have to understand, right, that what this is doing is it's setting up for a there's a price there's a price point up here, right? There's a bullish or a premium price point that IPTA has already said that they're going to run price to, right? Because IPTA is what moves price, not the banks, not uh, not us retail, right? No, nobody moves the banks. What moves the banks is IPTA, and IPTA will move banks to area of inefficiencies and liquidity in order to provide the central bank, right, and institutions time to price in their orders, right? So what they're doing basically is running highs and running lows throughout the week, basically jamming stops left and right, right? They're trying to get everybody knocked out of this market so that when they do move, right, they can move aggressively without having too many people on the right side of the move. Now, if you're retail, right, generally a lot of times what people see is you'll see price trade here, set the high of the week, and everybody would be selling this, right? Everyone's looking for their midweek reversal, right? So price trades up here and then trades down, and what everyone in here is going to be doing is selling, and the buyers who bought here will be taken out. Now, when they grab this liquidity pool here, right, most likely they trade into some daily or weekly order block or something of that nature. Then we see a big expansion on the upside, right? So this big expansion is allowed because they've wiped the board both ways, and now they're um, they have news that's able to add some volatility into the market, and it drives it higher. This one, so as you can tell, my tan lines are Monday, right? White Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, so on and so forth. All right, just in case you weren't quite understanding what these were trying to represent. So this is supposed to be the beginning of the week. This is supposed to be the end of the week. All this is delineating it are the days. Now, this week, consolidation Thursday reversal, very, very similar to this one, right? Um, doesn't always happen. Uh, these don't have to happen with NFP, right? They don't have to happen with, uh, you know, those type of news events. They could be some other news events. They could be, interest rate changes, or it could just be that price is in a area of interbank order flow and they're allowing time for the orders to build up, right? They run some lows to take out some retail and then they trade away. So for instance, right here, we consolidate. Price doesn't really trade much higher or much lower. And then Thursday, we'll see a run on this intra-week low right here, right, into a discount to a higher time frame PD array, and we'll expand off of that. This is our expansion right here. Wednesday, right? Oh, and I forgot to mention, this does likely occur sometime in New York session. London session will sometimes give a retracement here and then a trade down to open up or to take out this liquidity right here. And what that'll do is that'll form a scenario where we'd be looking for a New York reversal instead of a New York continuation as price reaches into a higher time frame discount array. Now, Wednesday, low of the week, right? Price trades into a higher time frame PD array on Wednesday. So here, right, price trades up just like it would normally trade here, right? Price trades up on Tuesday and it hovers just above our PD array that we're looking for price to trade down to and buy off of. So you have to be patient, right? Because if price doesn't trade down to and you're bullish, right? If you're bullish on the week and price doesn't trade down to your PD array, you just have to be patient and wait and look at what price is doing. If price is just sitting here stalling, waiting to come back down, right, and trade into your high time from PD array, just wait. Just be patient because it will trade down. So when price does trade down into a discount, right, into the discount array, what we're doing is we're looking for either the low of the data form in London, or we're looking for the same scenario as here, where London trades down and sets up a scenario for a New York session reversal, right? So all we're doing is lining up our PD arrays, right? Waiting for price to trade into them on all of these examples, waiting for price to trade into them, and then that's going to be our buy scenario for short-term trading. Notice some of these can last 1, 2, 3, 4 days. Some of them can last 2 days. That's the nature of short-term trading. Let's go ahead and look at the last one. Very similar to this one, except normally what we'll see is the low of the week actually be formed on Monday, right? And all it does is price can sometimes even stay around here. It doesn't have to form on Monday. It could just stay in the same range, or price will rally higher to begin the week. You see some consolidation or retracement, right? Back into internal liquidity. And then you'll see the expansion move on a Wednesday up to the upside. Now, all of this is this is a tricky one for a lot of people because they see Monday as a day for setting up. They don't see Monday as the low or the high of the week whenever it forms. What you're going to be doing when this scenario happens is looking, okay, what did the previous week do, right? And did the previous week run a level of lows or stops to where we could be expecting a reversal? And was there a break in market structure to the upside, right? What happened in the previous week? And we're going to be looking at when price trades here, right, on Tuesday. We know that price doesn't want to run just straight bullish, right? That leaves too many people in the moves. So what we want to do is allow price to trade up, but wait for price to trade back into, say, a BISI in here or a bullish order block, something of that nature, trade back down into it, and then give us our one shot, one kill, our expansion move off of that internal liquidity in here. All right. This is an example of Tuesday low of the week. All of my charts in here will be the euro, just for context. Purple lines delineating the beginning and the end of the week, and these are the session breaks for each day. I have Monday, Tuesday, Wednesday, Thursday, and Friday delineated. So this would be an example of Tuesday low of the week, right? If we look at price, right? Price opens here, this burgundy line. That's what I have, this SOAP, Sunday opening price. We know when price is above Sunday opening price, right, we're bullish on a pair. When price remains below Sunday opening price, we should be bearish on a pair. It's a very, very simple way to help you find direction in the market. Now, when price trades just below Sunday opening price into the daily bullish breaker, right, this is a buy scenario. So price trades up, right, not too far, just consolidates. Then price sets a low, trades past Sunday opening price and Monday's low, taking out previous day's low, right? Trading into a daily discount array. Our target is going to be the daily rejection block, and we see price trade up, expand to the upside, breaking structure here. Price consolidates, actually gives us a turtle soup back down to Sunday opening price. Notice that Sunday opening price will act as a form of support or resistance in a bearish case to price whenever it trades above or below, right? And there's going to be some concepts that I'll show you that's not just only opening price, but even weekly gaps, SIBIs, BISIs. Imagine it just like a gap, right? When price trades through it, it's going to act as a level of resistance, or trade up through it, it's going to act as a level of support, as you can see right here. Now, when price trades down below here, we're running stops and we're trading into a higher time frame PD array. When price trades up, we see bullish order block respected, right? And then a break in structure. This is confirming all for a bullish week. Price consolidates, trades down again, Sunday opening price, and expands to the upside. Now, do you have to catch from this high to, or from this low to this high? Not necessarily. But if you understand where we're looking for price to go, right? We're looking at a discount array to a premium array on the higher time frame. We're looking to catch that expansive move. Now, once price gets near it, right, or even once price takes out these equal highs here, perhaps after this turtle soup, right, you will take partials. You don't have to have your whole trade on the whole week, right? You wanna make sure you're always securing profits because you can't go broke taking profits. Now, when you enter a trade, right, off of the premium or the discount array, depending on the bias, in this discount daily bullish breaker, you'd be entering somewhere in here in this triangle that I've delineated right here. Now, this would stop a lot of people out that would got in here, because what they're doing is they're moving their stops up really, really fast. So a trick when short-term trading is to not move your stops up so aggressively, right? Because price, you're trading over the span of a whole week. Price can easily manipulate 50, 100 pips for a single day, right? And come back and take out your stop loss and profit. So what you do when you're short-term trading is you allow yourself to take partials while not taking off the whole trade and not moving your stop loss up so aggressively. Because if you jam your stop loss up into profits really, really soon, then when you get stopped out, you're gonna feel like you did something wrong. When in reality, you're just trying to be smart. But when short-term trading, you have to understand the nature of your trade and understand that you have to let it play out and take partials versus moving your stop loss up. Now, moving it close to break even or tightening it a little bit, putting it just behind, just below this low, maybe wouldn't be such a bad thing. But you have to remember that price can trade down here and your broker can open up your spread on you. So you just have to be careful and understand the pair you're trading on and understanding, how the short-term trade is supposed to work. Let's look at the next example. All right, so this is the Seek and Destroy Friday. This would be the bullish Friday, right? Again, delineations, beginning and end of the week. Look how price trades, right? Monday, we trade up and we trade down. Trade up, trade down, trade up. We're staying in this range here, from this low to this high. So when we're looking at this range, right, we're going to take the high and the low and draw out our equilibrium, right? This would be our price range, our premium and our discount. Price is trading here, trading up. Look how price sets all these equal highs in here. Price sets relative equal lows here and here, right? This wick and this could even be what you'd like to call our equal lows on the bottom, right? So now we're looking at this, right? Price trades up aggressively on Thursday, gives us a run above these intra-week highs right here, clearing out this buy side liquidity, and then breaking structure to the downside, setting these equal lows here, right? Trade up, back into filling this SIBI right here. This is now a balanced price range, right? We get an aggressive candle up, an aggressive candle down. The price rebalances here, right? Trades into this. We do not expect it to trade higher. And if we understand our weekly profiles, we see price trades in a very, very tight range, takes out an intra-week high. We have equal lows, right? And price is just broken structure to the downside and traded back into rebalance. We understand that most likely we're going to go run these lows and get our weekly expansion on Friday. Now price trades down, right? Sets another set of equal lows here, and we'll run these price lows here. Whoops. I don't know if I can go back. Yeah, there we go. So price will run these lows here, right? And tap into this 4-hour breaker. Now, this is also a daily rejection block right here. However, for me personally, I would prefer to take it off of a bullish breaker than just a rejection block, as sometimes rejection blocks can just be ran out and continued through. All right, so for me, even though there's a daily rejection block here, I prefer to look at the 4-hour breaker. Now, price will trade down, right? Trades up, and then we see one more tap to this breaker before we see an expansive move here. Look how we've done. We've taken out our buy side liquidity, right? Knocked out all of our sellers. Then we take out our buyers, right? Knock out all of our buyers, taking out the sell side liquidity. And then we aggressively expand to the upside. Now, I don't have it delineated on this chart, sadly. I didn't have it marked up, but there's actually a SIBI up here that we traded up right into here. Tried to get up to consequent encroachment here, failed, and then we trade to finish the week. Now, this expansion, right, from a discount to a premium, right, in the terms of a premium fair value gap, right, we've taken out buy side, taken out sell side, and now we've expanded. they cleared the boards so they can make this move happen here. All right, let's go ahead and look at the next one. Consolidation Thursday reversal. Again, weekly delineations, daily delineations. Look at our price now. So this is very, very similar to the last one, right? Except we see price here set an intra-week high, right? Relative equal highs in here. Then we see price set relative equal lows all in here from Tuesday to Wednesday. Price will run these intra-week lows on Thursday, right, and trade into a higher time frame discount array. We balance into a daily SIBI, right? We balance into a daily SIBI. You can see the high here, the low here. Look how price action trades down to consequent encroachment here, rejects hard, then trades down one more time, clearing out these right here. This right here has sell side liquidity right here. Price trades down below, clears those sell stops, balances out this range, right? Then we see an immediate retest of this order block here. This becomes a bullish order block inside of a daily BISI, right? Daily balanced BISI, and price expands aggressive to the upside. And look where we expand to and close for the day. Price does expand here, but still closes here for the day. We close above Sunday opening price. Now, remember in the first example I showed you, whenever you see price trade back above Sunday opening price, this is an example of a bullish trade, right? So if you did not catch this low here, right, what could you be looking at perhaps to take a trade off of? Well, you could be looking at Sunday opening price to be your support, your new support, right? Because you don't typically want to see price trade back down below and sell, right? If price trades down below Sunday opening price, you will be at a discount, right? It's a high probability buy, and obviously a sell in the opposite case. But another thing you can use to add to your technique, right, is remember, look at our range. We have a high, we have a low, we have a breaking structure to the upside, right? Yes, we have a breaker here, right? We have a breaker here, but our range equilibrium, which is all price needs to get back down to in order to be at in terms of a premium discount, at a discount, right? Then all we have to do is take our high and low, divide it in half. We have our range equilibrium, right? Look how price trades down below Sunday opening price, which is now a discount, right? And taps the range equilibrium here. That is going to be your buy scenario. Now, you would add a few pips for spread, right? And it'll probably get you very close to Sunday opening price. Now, look how price expands all of this, all the way up here, straight to our 4-hour SIBI. We go from a daily BISI all the way up to a 4-hour SIBI, right? So price trades from a discount to a premium after balancing out a BISI, trading breaking structure above Sunday opening price and above here, above these highs, right? Balancing back down to equilibrium. That equilibrium price point is going to allow price to aggressively run higher. All right. Look at the next one. Wednesday low of the week. Here's another example, right? We have where we see price trade here, consolidate, trade below Sunday opening price. Now, remember, right, using Sunday opening price in its theory, we're expecting this to be generally a good area of support or resistance. Price trades down. Notice how price cannot break back down above or back above this Sunday opening price. However, we see price set a low here, right? Trade back right up to it, failed to get above it. Then we see price run this intra-week low right here on Wednesday and trade to our daily bullish rejection block, right? So we have a rejection block here on the daily, drawn out. Price trades down below it, or into it rather, and we see an aggressive expansion to the upside. Now price trades back down and does what? Trades back into this order block here, respects it. This is where you're looking at price action and you're trying to determine, right? Our setup is right here, our buy is right here. Do we move our stop up immediately? No. We hold our stops here below this low because we know that there's a low likelihood that price trades back below it. Price trades back down, right? Trades up, back down, respecting bullish order blocks here, here, and here, right? Price trades up again, back down into this bullish order block, respects it again, and we see a break above Sunday opening price, right? And then we see price close above Sunday opening price for Thursday. So price closes right here above Sunday opening price. This right here, if you miss this trade, right, will tell you, hey, our bias or our weekly direction, right, has switched to bullish. We set the low of the week on a Wednesday. So we still need our weekly expansion into a premium array. So we'd go and we'd have our daily and our weekly and our monthly premium arrays outlined here. We'd have our levels drawn out. In this case, there's a 4-hour bearish order block here, and then there's a daily balanced SIBI right here. Now, price trades back down, remember, below Sunday opening price. So instead of using range equilibrium this time, what I did was look for a PD array on the lower time frame to align with our bias, right? We have a breaker right here as well, right at Sunday opening price. This guy right here, this range in here, we would just use that as our breaker, or you could use this right here as an order block. But we prefer to use our higher time frame ones right here, daily bullish order block, in order to allow us to, I guess, trade. Actually, honestly, what you could do on the daily, this right here, look at this day. See this bearish run? Price opens here, closes here. Actually here. So that means that there's a daily bullish order block that formed here because today, this day, closed above it, which means price looked like this. Down candle, up candle, right? So down candle, up candle. And when this up candle closes above this day, that creates a daily bullish order block. Price trades back down below Sunday opening price into that daily bullish order block if you would like to use this, right? Remember, when price traded below Sunday opening price after we traded back above, that is our discount, right? And we align it with smaller PD arrays here, or we keep our higher time frame PD arrays if we miss this one. You're always trying to find a way to look at price on the higher time frame to align yourself with the weekly expansion. Because price still has not gotten out of this range. Look what we did on Thursday, right? Price Monday set this high here. We traded down, ran the intra-week low, set the low of the week on Wednesday, traded all the way back up here Thursday, and set equal highs. Is that going to be the high of the week? Most likely not. So we're still expecting our weekly expansion into a premium array, which we've outlined here as our daily balanced SIBI and our 4-hour order block. Price trades below Sunday opening price. This is our buy scenario here. We take this up to our premium array. We take profits. Do you have to catch this whole move? Not necessarily. But this week is a very, very easy week to get a re-entry on if you miss this trade here. This would be more of an intraday trade, but you're looking to catch the short-term trade and then hold it till the end of the week before you take your profits. All right. Then we have our midweek rally. Now remember, this is the week that I was telling you that would be very tricky for some people, just for the simple fact that most people aren't expecting the high or low of the week to form on a Monday. Now, remember, we're only looking at bullish examples, so I'm not going to go through the bearish examples. What you're going to do is you're going to go through bearish examples, and you can send me charts or send me things that will, and I can go through them, and I can be like, this is valid or this is not valid, right, and help you try and figure out what your weeks are going to look like, right? You're trying to determine the weekly ranges, practice looking at them, so that way when price is playing out, you can see what's happening. Now, with our bullish predisposition, right, we're looking at this. We acknowledge last week's price action. What did last week do? In this case, this was the euro, and price actually traded into a balanced price range, a daily gap, right, that we had traded into and balanced out previously. It traded below into that, balanced it out, and then broke structure above. That's what happened the previous week. So we know that we have a break in structure on the daily to the upside. We have a balanced price range below us. When price trades back down to our daily balanced price gap, right, that is going to be our short-term trade entry right here. And if we miss this, the good thing about this weekly profile, right, is you still have an opportunity for 2 more short-term trades to get entered on. So at least 2 turn. And it could even possibly be more. Price, no, as you see, does trade up, trade back down, right? But you don't really see huge movements to the upside or to the downside. It mainly stays in a very, very tight consolidation. This will happen a lot, and it may sit the low Monday and just trade very, very tight before expanding, right? It doesn't have to take out the lows before expanding. If we get a midweek rally, right, what you're probably seeing in price action is this: a aggressive push up, right, because that's the direction of institutional order flow, right? This is institutional sponsorship, pushing price higher, protecting every single low, for not allowing price to run lower. But what you see happening every single time is, look at this high here, right, marked by the low of this candle, and this low here marked by the high of this wick right here. So these two wicks. This area in here is a BISI. Notice how price trades down into it to the consequent encroachment here of this price gap. And we see another round of institutional sponsorship to the upside, a break in structure here, running out these equal highs. Then we see price consolidate again, right? We have another area, right, marked by this wicks. Actually, I did this one, but you could use this one right here. This is the proper one. We have this high and this low, right, of these particular candles that mark our BISI, right, another BISI. So if you miss this institutional order flow entry drill here, right, trade back down constant encroachment by expand to the upside, price trades down again into this area of interbank order flow, this BISI right here, right? This is, imagine these are like billboards saying enter me, enter me, enter me, right? This is where the banks understand IPTA has ran price so that when they rebalance, notice how much time they give them to rebalance and trade. And this is on the 4-hour chart, or no, this is on the 1-hour chart. This is on the 1-hour chart. They give 1, 2, 3, 4, 5, 6 hours for people to get into this trade here at consequent encroachment, which is, in terms of premium and discount, a discount, right? Fair value, fair valuation, right? In terms of the weekly range, we're at a discount as well, right? So we understand that Monday set the low of the week. Prices rebalanced, given an opportunity for buyers to price in their orders, right? Large institutions to price in their orders. We see another break in structure. We're given another opportunity here. This one, and this one could be your short-term trade that you hold all the way up to your premium array. In this case, 4-hour bearish order block. I believe there's also a daily bearish order block up here as well. What I tend to do is I try to trade from a daily to a 4-hour, or a weekly to a daily, or a monthly to a weekly PD array. That's what I try to do in terms of trading from premium discount and discount to premium. I like to trade to a lower time frame, if that makes sense, preferably. But I don't like to go below a 4-hour, because there's, on the 1-hour, there's so many fair value gaps, order blocks, and things that it doesn't really delineate which one you should be looking at, right? It's harder to determine because there's so many. So our higher time frame clears that up for us. Price expands to the upside, taps our premium array. Do we have to catch this entire move? No, we don't, right? I'm sure there's an imbalance, or some kind of SIBI, BISI, something in this scenario here where when we trade up into, right, this wick, for instance, you could be your take profit. You don't have to catch from the low here to the high here. This is just a perfect example of what you would like to be looking at and seeing in price action. Again, I did not mark this on this chart here, but as you see, I have this BISI mark here, this BISI mark here. There's also another one here, right? We see price expand to the upside, taking out this previous high here. We have a bullish order block right here. Price trades up to our premium array. Notice price will rebalance, create a balanced price range right in here, right? We do not tend to see price trade back above these unless we're still bullish. So price trades back down. Look where we trade down to. We trade back down into this area right here, this BISI. So this is another area, right, where you could get a trade and hold for higher prices if we're still bullish, right? So this is our institutional order flow entry drill. We wait for price to tap into this, We enter right away. Stop goes below here, right? Price should not run past it. Price should respect it, and it does. This right here gives you 3 really good entries and another possible long-term entry if you're looking to trade and hold over the weekend. Now you don't have to, but it is people do it sometimes. I prefer the one shot, one kills work. You trade to being Monday, Tuesday, or Wednesday. You hold to the end of the week. You take your profits at a premium rate. That's that's the preferred trade to take. All right. And as always, right, there are always exceptions to this, guys. This isn't going to be every single week looks exactly like this because you're going to have some weeks that are very, very tight consolidations. They don't move at all. You're going to have some weeks that fall off of a cliff and just fall, or there's going to be some that just take off to the moon, right? There's always going to be outlier weeks, all right? The market's never going to be 100% the same every single time, right? Just remember that when you're using the weekly ranges, you're using them as templates to give you a basic idea of what the market is trading from and to, whether it's in terms of premium or discount, right? And you're trying to understand what price is giving you, right, and how it's going to unfold throughout the week in order to get your entries, right, for short-term trades. All right, I appreciate you guys. Y'all have a blessed one, and I will see you later.